Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. Last week I noted how on the Friday, 3 weeks ago, the market made a key reversal up, if only just, based on what had become a solid support from the November 2014 high at 201.25. This daily key reversal up saw a maximum effort to move higher until Friday 2 weeks ago, when prices volte-face and headed down for bearish opening Black Mariposa. As I said 2 weeks ago, this was not impressive behaviour if you're looking from the bullish side. It was also not impressive behaviour if you're a bear, as you'd think we might have had a half decent move lower. Thus we ended up neither being impressive on the top side nor on the downside. And this has been the case since early October, when prices started to ping-pong between the November 2014 high as support below the market and the July 2021 high above at 2217.85 on top. Last week started with the bears in the ascendancy as prices headed towards the support at 201.25. But as I said earlier, overall it is still not impressive. I clarified this last week with the following statement, and I quote, "Until prices tackle one or other of these two congestions, the resistance above and or the support below, then we may well stay here for a bit in a bit of a wideish range," end of quote. Well, it seems the market felt this way as well, as the November 2014 high was tested again last Tuesday and held, and what is more, turned the market around with a key reversal up. Yet last Wednesday looked like it was business as usual for bearish dark cloud cover pattern type action. But this time it was really different, as last Thursday the somewhat unassuming move back up ended up making the highest close since early October, and was enough of a move that last Friday's action higher broke up and closed clear over the previous solid looking resistance at 218 even. This was enough of a move and a close high to make last week a weekly key reversal up. And that has been enough to start a strong move higher, which will at the start have all the ammunition obtained over October to early November between the 201.25 support and the 218 even resistance. So how far may this rally go? Well, at the moment I'm not sure. You see, I could look at the whole July to date action as a type of ascending triangle, but the action looks, well, inelegant. I'd rather rely on the two resistances we still have above the market to be markers on any move higher. The nearby October 2014 high at 229.15 and the 2012 high at 241 even. I do note that there does not seem to be that much in between. Additionally, if prices do turn back, then look again at the 218 area to now provide support. London coffee. Since the middle of September, the market had maintained a sideways action between roughly 2100 below and the August 2017 high above at 2173 until 3 weeks ago. That's when we saw the market take a move higher, up to the next congestion at 2279. That's the whole of 2017 high, where, somewhat surprisingly, given the amount of ammunition that had been stored since the middle of September, the market ran out of steam and formed a pipe top 3 weeks ago. Prices then dropped down to the congestion zone, to the top of the congestion zone I should say. Further attempts to head lower failed at the August 2017 high, supported by the June 2017 high at 2177, such that 3 weeks ago, at the end of the week, we saw a bullish engulfing pattern finish the week off. This sort of follow-on higher during the following Monday 2 weeks ago, all the way up to the same congestion area overhead at 2279 where prices got stuck. The rest of that week was a series of halting steps lower, such that the week finished with prices closing right on the early August uptrend, currently at 2220. This was just over the same two highs of August and June at August and June 2017. At the start of last week, prices took a surge lower, down through these two highs and into the congestion from mid-September to late October, or roughly between 2100 and 2173, where they halted. Thus this action expanded what was a single top into a possible horn top. It is at this point that I said last week, and I quote, "What will now be interesting will be to see if the market has the legs to keep going below the August to date uptrend that it has pierced today." This is because, as I said last week, which in reality is now 2 weeks ago, and I quote, "There is a possibility we have a large rising wedge pattern from July to August time that is still working its way through now." Yet I find it a bit of a stretch to call it that, at least just yet, but it is worth noting and paying attention to for the future. And that's currently between, right now, 22.20 and 23.63. Now, to be fair, the market made a hell of a try lower last Monday, down as far as 21.59 and closing at 21.66, but it wasn't enough. You see, I suspect the rising medium moving average, currently 21.47, put off further declines because this moving average has been partnering upwards with the August-based uptrend since it began. And I think the market knew that to break the uptrend and the rising wedge, you would also have to break its partner, the medium moving average. And that was just one move lower too much. Thus the horn top was not fulfilled, and prices turned back up again. Yet in this move up last week, they created another move higher this time. They created a weekly key reversal up last week, just like the New York contract. Though it hasn't been a quick or easy movement. For example, we had a bearish dark cloud cover pattern type action last Wednesday and even a bearish harami last Friday, which is why we started lower today. However, we still have a weekly key reversal up last week, and perhaps more importantly, we are back within the rising wedge pattern again. So, look to the uptrend trend line and to the topside trend line to guide this market in between them. To be honest, we're in an area that is fairly bereft of major support or resistances bar these two trend lines. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investors Services International Limited. And here comes the final bit.